There was a huge milestone hit today on Wall Street. The Dow surpassed the 20,000 mark for the very first time, even closing above it. And as you can see, it drew applause. This new high leaves the Dow Jones Industrial Average up more than 1,700 points since Donald Trump won the presidential election in November. Investors say it is a combination of optimism for the economy and President Trump's plans, and also the strength of the solid economy he inherited from President Obama. So what does this record high closing of the Dow Jones really mean for the average American? Well, financial planner Laurie Itkin is here now with more on that. Laurie, thank you for joining us.
Happy to be here.
All right, you heard those opinions. What do you think is driving the market up over the $20,000 or 20,000 mark?
Well, first of all, let's just say that 20,000 is just a number. The Dow hit 18,000, 19,000. Today it's 20,000. So I'm not going to be managing my clients' investments any differently tomorrow than I did today. But it is an historic day, and it's bittersweet because only about a half of American adults have actually benefited from this rally we've had over the past 7-8 years, because only half of Americans are invested in the stock market. And these days it's very easy to have exposure in stocks. Just sign up for your employer's retirement plan and you'll be there. So it's sad that, only half of us have really benefited from this wealth.
And what do you attribute that to? Did the recession get more Americans to withdraw funds from the stock market, or are you just not seeing people making those investments today?
Well, I think it's two reasons. The first is what you said. When we had the great crash in 2008, a lot of investors pulled out and were scared, and they never got back in. And we're also finding as millennials enter the workforce, so much of them are saddled with student debts that they simply don't have the funds to participate in their employer-sponsored retirement plan. So that's, I think, why we're finding a declining number of Americans actually being able to benefit from the stock market.
Well, what does it mean to those who do have 401ks?
Well, so sure, people are going to be nervous about, well, are we going to have a correction? Are we going to have a crash? And I have to say that since the election, it's not even been 3 months, and the Dow Jones has gone up about 10%. And I don't know if President Trump will take credit for it. He takes credit for lots of things. But I think it's the fact that people are expecting that there'll be lower taxes, less regulation, and that is those types of things buoy the stock market.
So let me ask you, there were predictions the Trump presidency would tank world markets, and on election night we saw those markets across the globe plunge. So what do you think really changed in such a short amount of time? Is it as he lays out his agenda?
Well, we certainly did see them plunge. I mean, everybody was really nervous once he got elected, and we saw the Dow futures go down, and everyone thought the next day there'd be a crash. And like I said, we've just gone up. And so people are getting nervous. But I think for the average investor, especially young people, millennials, if you have a 401k and you're in it, you're long term. There's going to be ups and downs. We're not going to stay at high levels all the time. It's going to go up and down. But you only really need to be concerned if you're close to retirement or you're close to needing cash. In that case, I would not have all your money in the stock market. Really spread it around into different asset classes.
Well, and real quickly, based on what you're seeing, the green light given to the Keystone Pipeline and the Dakota Pipeline and things of that nature, are there certain things that you would advise investors to buy stock in?
Well, I think the market has already priced in some of these infrastructure plays. The Dow Jones, being 30 stocks, is one of those sectors that has really benefited. And we'll just see. I mean, President Trump says we're going to hire Americans to do the work. And with this wall, they say he's going to get Mexico to pay for it. I don't know. So I think we've got to see how this plays out. But definitely just really think about what your time horizon is and if you can withstand some volatility, because stocks will go down before they go back up.
That's right. It's not a sprint. It's a marathon in the stock market. All right. Laurie Itkin, we thank you so much for your input tonight.